Every crash, every crisis, every collapse from 1929 to 2008 to the inflation you feel right now, is just bad luck. It's a blueprint, a financial machine engineered so that when nations bleed, the same 1% drinks the profits. Think about it. While millions lose homes, jobs, and savings, a small circle of hedge funds, investment banks, and central insiders walk away richer than before. How? Because they bet on collapse itself. And those bets are made not on Wall Street's bright trading floors, but in the dark plumbing of the global economy, a world called the shadow banking system. You've heard of Wall Street, but this is below Street, a hidden casino of contracts called derivatives, worth over $600 trillion, operating outside traditional regulation. So ask yourself, if every crisis enriches the same people, is it really a crisis? Or is it a strategy? Where are you watching from tonight? Drop your country in the comments, because what we're uncovering affects all of us. And if you're tired of the filtered headlines, hit subscribe. Because tonight, we expose the hidden 1% who profit when nations collapse. Let's rewind the clock. The year is 1929. Wall Street collapses. Banks fail. Families starve. But in the chaos, a handful of financiers, J.P. Morgan, Rockefeller, Warburg, quietly consolidate power. They buy assets for pennies. They fund politicians. They emerge from the ashes stronger. Sound familiar? Fast forward to 2008, a different century, same pattern. The housing market implodes. Millions lose homes. The global economy freezes. But who comes out on top? Goldman Sachs, BlackRock, and Citadel, the firms that not only survived, but thrived, because they held the winning bets in the derivatives casino. Sound familiar again? And today, as inflation devours your paycheck, the same mechanisms churn quietly in the background, unseen, unregulated, unstoppable. After 1929, the U.S. passed the Glass-Steagall Act, separating commercial and investment banking to prevent another disaster. But by the late 1990s, that firewall was torn down. The Clinton Treasury, backed by Wall Street donors, repealed it. Within a few short years, the world's biggest banks were back gambling with your future. Their new toy, derivatives. These started as simple insurance for farmers and shippers. But by the early 2000s, they mutated into weapons of mass destruction. Instead of hedging risk, Wall Street manufactured it by slicing subprime mortgages into collateralized debt obligations, repackaging, reselling, then betting on their own toxic products to fail. The result? The 2008 financial crisis was a controlled detonation that transferred over $10 trillion in wealth from the middle class to the top 1%. And after the smoke cleared, the arsonists were bailed out with taxpayer money. Losses were socialized, profits privatized. Sound familiar? Even now, every inflation spike, every debt ceiling panic, every unexpected collapse feeds the same machine, enriching those who weaponize debt and derivatives against entire nations. This isn't capitalism. It's financial feudalism, where the peasants labor and the lords profit from their ruin. Here's where it turns from tragic to sinister. Because behind every collapse, there's a trigger and someone holding the insurance policy. After 2008, the media blamed toxic mortgage. But insiders knew the real detonator was the credit default swap, CDS, a type of derivative invented in the 1990s by bankers at J.P. Morgan. Imagine, you could buy fire insurance on your neighbor's house, even if you don't own one. Then buy 1,000 such policies. Now imagine your neighbor's neighborhood is the global economy. Every time a nation or company fails, someone, somewhere, gets paid. By 2007, the total value of global GDP was $65 trillion. The value of outstanding derivatives? Over $500 trillion, 8 times the size of the real world. When the crash came, these paper bets became bombs, weapons of mass destruction, Warren Buffett warned. And here's what your finance textbook doesn't say. The same elite banks that crashed the system didn't lose. They hedged against it, using offshore shadow accounts and private counterparties hidden from oversight. And the architect who helped legalize it all. You won't believe the name. Because it wasn't a banker. It was a U.S. Treasury official celebrated as a reformer who ensured these derivatives stayed unregulated right up until the world burned. The receipt is wilder than you think.
Collapse, you need to understand 2 words: derivatives and shadow banking. A derivative is a contract whose value is derived from something else, like a loan, bond, or even a country's debt. It's not real value. It's a bet about value. The shadow banking system is where these bets live. An unregulated web of funds, repo markets, and vehicles that move trillions outside traditional banking laws. They don't take deposits or make loans, but they create infinite leverage. Traditional banks are capped by reserve ratios. Shadow banks? No limits. They multiply credit through synthetic derivatives, phantom capital untethered from reality. In 2007, the notional value of derivatives hit $680 trillion, over 10 times world GDP. A mirage built on leverage and blind trust that the music would never stop. When it did, central banks rushed in, not to fix it, but to reinforce it. Quantitative easing, zero interest rates, liquidity swaps. Trillions in fresh money funneled to the same institutions that crashed the world. It wasn't a rescue, it was reset, a silent transfer of ownership. By 2012, the top 10% owned 77% of all US wealth. By 2023, over 89%. Let's look at the numbers. Meanwhile, the derivatives market didn't shrink, it evolved. Crypto futures, carbon credits, AI-driven swaps. Different names, same playbook. Financialize everything, hedge everything, and make sure only the insiders win. 700B bailout in 2008, 4T in Fed asset purchases by 2014. 1.7T in student debt now underpins derivatives portfolios. 80% of corporate bonds are junk-rated but insured through unregulated swaps. Global shadow banking assets exceed 160T, half the world's financial system. So when nations default or currencies collapse, the derivatives market surges because someone, somewhere, holds the insurance. Take the COVID crash of 2020. Small businesses closed. Unemployment hit 14.8%. Yet hedge funds like Bridgewater and Citadel made billions shorting via derivatives. When nations suffered, they feasted. The same 1% control both the risk and the rescue. They engineer collapse through leverage, then buy the world back cheaper. Between 2020 and 2023, the top 1% added $42 trillion in wealth, while the bottom half lost purchasing power. Collapse isn't chaos. It's harvest season. Derivatives ensure that no matter what happens, the same elite few hold the winning tickets. If the global economy is a casino, we're the chips. Our mortgages, pensions, and national debts are the fuel. And the dealers, they don't play, they own the table. And here's the dark truth. This system can never unwind. Each derivative links to another, like dominoes across borders. If one major counterparty, and say Deutsche Bank, fails, the chain reaction could vaporize global liquidity in days. That's why governments will always bail them out. Not because they're too big to fail, but because they're too interconnected to unwind. The 1% know this. They've built a world where their risk is our ruin, and our ruin is their payday. So where does that leave us? We live in a financial matrix, an illusion of prosperity built on borrowed time. Every dollar printed, every bond issued, every digital transaction flows through a machine engineered by and for the same elite. But the next collapse will be faster, digital, and global. When the derivatives chain finally snaps, there'll be no time for bailouts, no safe currency, no too big to fail, just reset. And while nations scramble, those who built the system will already be in lifeboats, insulated by private equity, offshore gold, and decentralized assets. They profit from volatility, they profit from debt, they profit from collapse itself. Because to them, collapse is not failure, it's profit-taking. We were told capitalism rewards innovation, but what if the most profitable innovation was its destruction? And the next time your nation bails out the system, remember, it's not a rescue. It's a tribute payment to the architects of debt. The system isn't broken, it's rigged by design. So are we wiser now, or just walking the same path in better suits? If you made it this far, you already see through the illusion. Drop your thoughts below. Do you think these collapses are engineered? And if you're ready for more unfiltered truth about money, power, and control, hit subscribe, share this video, and join the community waking up to how the game is really played. Because knowledge is the only hedge the elites can't buy.